You're expecting Indian stocks to play catch up, but not without caution, I guess, because we're still seeing surging virus cases and the worst contraction in decades as well for the economy.
Yes, that is correct. I mean, we did see a significant contraction in Q1, but largely due to the most severe lockdown as well imposed in India. FIIs have continued to pour in money for the fourth straight month, but keep it in context that India saw a huge outflow in March as well. So year to date, I think we are just about 4 billion net inflow by FIIs. It's supported by global liquidity and low interest rates.
And speaking of liquidity, that's also provided by the millions of local investors buying into local shares.
Correct. So while during this pandemic, we saw a lot of retail participation that continues to come into the markets. Though DIIs in August were net sellers and they sold about $1.5 billion in August. So profit booking happening on the DII side, but retail participation continues.
Rakhi, I'm just wondering, we have fresh confrontations between China and India at the border, following months of standoff. I'm just wondering, how much is that weighing on market sentiment in India? How closely are you watching that?
It is being watched closely. We did see a bit of the markets contracting in the last 2-3 sessions. It is being watched, and it will be closely watched. But there are so many other concerns, and generally there is also a lot of aspects wherein the different sectors are also improving. So July, even after the lockdown, with the opening up of the economy, which is why FIs also put in money, is they're seeing demand recovery and supply recovery happening. So a lot of variables are there that are working against each other also in the markets during this time.
Rakhi, just to mark the market open in India, we're looking at pretty much red across the board. The Sensex down about 0.1%, and the Nifty 100 are flat at this point in time, 11,465. I'm just wondering, in terms of sectors, what are your thoughts on the banks in India? How much clarity do you have in terms of prospects for the sector?
So the resolution plan came out yesterday, the KV Kamath led committee resolution plan, which is talking about how 26 sectors will get this relief in terms of their all the issues that they have faced during this moratorium period of 6 months. So, in a sense, real estate is also improving. We'll get some relief because of this resolution plan. But besides that, banks, as we've had 6 months of moratorium, we will only know the outcome of that NPA over the next 2-3 quarters, what kind of pickup will happen in NPAs by the end of the year.
Rakhi, how bad are things economically, and are you worried?
So we did have a severe contraction in Q1, but since the opening up in June, July, August, we've seen a lot of supply side factors improving and coming to near normal levels, to the pre-COVID levels. Unemployment also has improved, and we are seeing that at pre-COVID levels of at around 8%. Now, on the supply side, while things have eased up, demand is also recovering in pockets. Different sectors are seeing different types of demand. So pent-up demand in autos has come back. Rural still continues to buoy FMCG, tractor sales. Advertising activity is now picking up. And consumer durable sales are continuing. So there are a patchy recovery on the demand side, but things are improving for sure.
I mean, unemployment seems ridiculously high. So many jobs lost. The rural side of things perhaps doing okay thanks to a plentiful monsoon this year. But it's not enough. Agriculture can't lift this economy out of the quagmire.
That's correct. It can't lift it out of the quagmire, but it does add to the GDP. I mean, if we break up that Q1 contraction, we do see that government spending continued. and imports, though, were much lower, which gave a net surplus in June. But government commits to continue to spend. Central sector enterprises will continue to do capex. Infrastructure is a big push by the government. When they start kicking it out, it will have high multiplier effects in terms of recovery. So we are hoping also that the government does put in some kind of demand stimulus, which has been wanting in India.
Absolutely, the government could be doing more. Many people, commentators on this program, have been suggesting that. But has the RBI done all it can, in your view?
So, if you've noticed over the last couple of weeks, RBI has been a little bit relaxed in terms of the foreign currency exchange, with FIs flows also coming in and wanting to ease the inflation on the petrol and diesel side. They let the rupee appreciate a bit. So imports will also be a little better in terms of pricing for petrol and diesel with the economy picking up. So the RBI may also, depending on how inflation, the CPI inflation moves, may want to look at the interest rates at some point in time, providing further relief to borrowers.